Good morning. It's actually Wednesday today. We're going to do a quick report on the current inventory and conditions here in the real estate market in Toronto. Just a quick update on the inventory. We're at 19,670 units. We're up 1,000 since last week. And like I mentioned earlier this year, we're going to start packing out 1,000 per week. And this is why we're urging clients to get on the market, get sold as fast as possible before more inventory hits the market. More inventory, less money when you sell. So hit the market as soon as possible. Make sure you're listed and ready to go. And make sure your price is very, very competitive in the market currently right now. We're getting a lot of pushback with sellers where they're seeing pricing and they want to get into this price that doesn't make sense anymore. And what happens is we're listing them and they're not getting any activity, and then we'll ultimately have to start reducing price. So right now what you got to start looking at is what's the base price for all the same product in the market. If you have a detached 4-bedroom in a certain community, look what they're listed at, and then maybe bundle it just 2 to 3% under what that price of that property is. Kind of start even 5% if you want to get out of the property a little bit faster than usual. Like, you're going to have to start being price competitive. These are challenges we're facing on both sides of the borders, where sellers this year they're thinking that the market's going to continue to climb and you're going to start seeing appreciation. But if I'll go into an article later just to show you that appreciations, we probably tapped out for the year. So try to get as much money as you can if you are selling, especially if you bought. If you purchased a property and you got to close it in the future, get it on the market, get it sold quick. And just remember, if the market's going to be in a decline and you have like a 2 to 3 month closing, you want to make sure that the house is going to appraise in the future. So make sure you're getting hefty deposits, which a lot of the times now, even with buyers, they can't come up with the full 5% of $1 million, let's just say. So like $50,000 deposits, it's hard to come up with that hard cash. But try to get the largest deposit as possible and try to protect yourself, because if you are selling, I would say just be a little bit cautious right now, because whatever we're selling today may not appraise in, let's say, 3 to 4 months from now. Just be very cautious with that. I know in 22, if you followed our trend when I was unloading all our investment properties, I made sure that I didn't commit when I sold my primary residence to another purchase of another property. Or I did, but it was contingent on the closing, because we actually bought a property in the United States, and I had that property contingent on the closing, not the sale, the closing. So when our Nobleton property closed and we were cashed out, I was able to move that money forward. But if the deal fell through, which it almost did, where the appraisal came in, $200,000 short, or $250,000 short, it would have, I would have been on the hook for that property. It wouldn't have the negotiating power nor the fight. Let's just say I would have to succumb to anything that came to our paper at that point from the buyers, because you're desperate to sell. So just be cautious there. I mean, this is going forward. Again, current inventory 19,670 units, 570 selling. So it's obviously sales are quite low too. It's only 570. But just in reality, we did a checkup through. We just kind of pulled a small neighborhood like in Bolton. Let's just kind of went in there. So T-minus 60 days of sales. So last 60 days of sales, you had, I think it was like 35 or 37 properties sold. So every other day a property is selling. Woodbridge, same thing. In 60 days, I think there was 60 sales. So every day there's going to be a sale. And just make sure when you're pricing your house, you got to get it at a price that makes sense to the market. Don't look at money that doesn't exist, because ultimately, like, we all feel like everything that we own is going to be more valuable. That's why it's important to get a professional opinion, someone that's going to tell the truth, like our company, and at least give you, the reality of where these are going to be sold at, and at least you can kind of prepare for that, and then get it on the market, get a price right, do all the proper marketing, make sure it looks better than every other unit on the market, and then get sold. We're going back to that old saying where it's like, more features and benefits and a better price is going to get you sold. So just keep that in mind. Let's just read through an article. This might be a little long one today. It's regarding the tariffs. Clearly, the new administration here in the United States are putting 25% tariffs, if you're not aware, on steel and aluminum out of Canada. So Canada's largest trading partner with aluminum and steel is America. I believe it's 1% of the GDP. It's $40 billion a year that kind of transfers to south of the border. The issue here is, it's good for the United States, bad for Canada, clearly, is that right now, housing doesn't make sense right now. If you're a builder, I'll read a little bit of this article, but if you're a builder, clearly right now, you can't with the cost of land, the cost of building, the cost of development charges, cost of labor to get the property up, and then what you're going to sell it for, or affordability for someone to purchase it, it's very slim margins in today's market. So what this article basically stated is that construction costs are going to come up further. And I didn't realize this. I'm like, okay, well, if we're not shipping there, we can just keep the product in Canada, which would make sense. It's not that. It's cost of developing the material or mining and producing it. It's going to cost more because you're not doing it on a mass growth scale anymore, because obviously Canada is a very small country, only 41 million people. And if you just see, I was very surprised by this, that none of the provinces trade with each other, which is crazy. It's almost like we live in a country that's just disjointed, always been disjointed, and hopefully they can kind of collaborate and build like a proper country. It's like, how does not inter-provincial trade happen? It's bad management, clearly. That should be number one agenda on any economic minister of Canada or prime minister, whatever it is. This needs to be number one, because look where they put Canada in its place right now, where this is it could face bankruptcy. If you want to talk about a takeover, this is a great opportunity. Make it as weak as possible and then offer them a lifeline. And this is, again, bad management. Last 10 years for sure, but it's probably been the life of it if provinces haven't been trading with each other, which is crazy. So they're thinking already now that cost of obviously metals for development, gypsum board, lumber, everything that builds a house right now is going to go up, probably 10 to 20% of what's currently listed right now, which is going to drive up, again, the end user purchase price. So what are the builders going to do? They're facing, there's one great article here, or one portion of this, I want to read it out. It says the group CEO, Scott Anderson, warned that could be a brutal blow to the housing sector and therefore to the housing affordability. When you throw something as dramatic as trade tariffs into a government that's already suffering, or environment rather, that's suffering from low margins, clearly, like low profit, high interest rates, high input costs, and the potential costs keep going up, plus you put on a cost of materials even further. So this is, again, it's going to nail down the market even further, like the housing market, like the new construction, which in hindsight is probably better for the resale market, because if they're not producing more products to the market, it gives more eyeballs on, let's say, resale properties, which is good for us. Let's just say if you own real estate. And that's pretty much that. I mean, it's unfortunate. We'll see what happens going forward. The only thing I'm always concerned about is jobs, right? Because if you're looking at condominiums now, there was, I read an article or watched a video just recently, and it was a big mortgage company was talking about last year there was 80 launches, condo launches, and 76 of them closed down. So literally, just remember, like you do a launch, you spend thousands of dollars on marketing, you set a sales center, you do this whole big pump up. You ever been there? There's like hors d'oeuvres and champagne, and the whoever's doing the building may do a little speech, and it's like a whole, a promotion and a production. So imagine having 76 of those and literally just shutting them down because there's no sales. Remember, when you get a condo off the ground, you need to have at least 70% of that unit sold in order to start building. That's when the banks start putting money in, because that's where the security aspect of it. So 70% have signed contracts, you can start the building. But if you're selling 20% and you still got 50, I mean, for the builders, doesn't make sense. They unplug it. They may hold a deposit and kind of see it go again, try to relaunch maybe this year. But it looks like they're going to just sit tight with that. Low-rise construction, same thing, very, very, very slow, clearly. I think what the issue is currently right now is in the past, buyers would purchase new construction and sell their house closer to completion. So that would give them like 1 to 2 years, and as we know, Canada, the appreciation rates were amazing, so you would make 10, 20, 30% more on the sale of your current residence. So you locked in a commodity, and then your commodity keeps rising 30% higher. So when you get into a new property, you take a big chunk of your mortgage off. And I know some clients and friends that did that multiple times, 3 to 5 times, and literally paid off their house, which is brilliant. I mean, I wish we did that as in hindsight. I don't like to move too much. I like stability more, but it is a good idea. And I think what's happening now, they don't trust it. If they bought now, is the property they're buying, new construction, going to be going down in value in 2 years. So they're going to be locking in a commodity at a high price, and then it's going to be descaling. So by the time they purchase it, is it going to be worth 10, 20, 30% less than what they purchased it for? So that's an issue there, and I think that's going through a lot of buyers' minds right now. And I think what happens, the Canadian market's going to have to change pace and kind of follow what the U.S. market is. It's great to be on both sides of the border. Obviously, we're we're listing agents for the Nobleton project. I can bring a lot of what we're learning out here in the U.S. back to Canada and show them how they're doing it, because these builders are on a different scale. Like, I mean, like a builder like Tribute or Mattamy is like very small scale to, let's say, a Lennar or Pulte. You know, these are just mammoth companies, right? They're not even the same building league, right? But what they're doing too is that they're building spec houses. And what a spec house is, which would make sense, and probably Canadian market would need to start doing that, is they'll build, like here they'll just build streets, they don't really care, and then they'll sell them, you know, they'll list them and then they'll start selling them near completion, and then that's how it's done. I think that's what the Canadian markets are going to start doing. Maybe start building 5-10 specs in a community like the Tribute site, and then just sell them off like that, instead of waiting for a buyer then to pick all the options, because that's how it's done here. I think that's a good idea even for them to have some product that they can sell, because coming out from dirt, I think what's happening is people don't trust the market currently where it's going to be. So it's too far out for them to actually put any money down. They don't trust like the future of the values of these properties, which I can definitely understand. Also, again, job market. I'm always concerned about the job market. If, again, going back to the condos not being launched, you got to remember, if there were 76 launches, or 80 launches rather, and only 4 buildings are going to get built, and that's if they haven't shut down already, you got to think of all the employees that are going to be on a building. You got every trade possible, and these are all high-paid employees, you know, 6-figure incomes, most of them, and that usually drives the economy forward, where there's, you know, money being put back into the economy with taxes or in like purchases and stuff like that, and consumer product. And now that's going to be gone. Low rise, the same. I'm getting calls from construction crews from in Canada that want to come out work here, but you can't just, you know, pack up your toolbox and just head to the States. We're not a combined nation, so you would need a work visa. You would need a whole bunch of you need a whole process before you can just come over here and start, you know, working, right? So it's just one of those things. But that's pretty much it. Again, just quick advice: if you are looking to sell, get it on the market as soon as possible. Get it up. If you have any questions regarding real estate and you want to give me and Mike a quick chat about your future plans, you can always reach out to us direct at 647-962-4372. Have a great day.